Hey everyone, Nick here. And this week I wanted to take a look at gold, and I figured that a video would be better than throwing some text on the blog, because that way we can look at a few charts and look at some things of what's going on. For a while, gold was really climbing higher, and there were a lot of talks about whether or not gold was in a bubble. And you haven't really heard a lot about that recently. That's because for the past probably year and a half, going back to August of 2011. And what this chart shows, this is gold over the past 2 years. So it kind of topped out around August 2011, and for the past year and a half, it's just been grinding sideways, up and down, but not really going anywhere at all. And now I think it's funny because you're starting to hear people say that the bull market is done, you should get out of gold, so on and so forth. And personally, I disagree. I think that fundamentally the story certainly is still intact. I think the bull market in gold is still intact, and I think it's still worth holding in long-term portfolios as a great way to hedge against inflation, especially if you have bond-heavy portfolios. Gold makes a lot of sense, and not only that, but as an insurance policy, if you will, against any kind of potential currency crisis, issues of, as we approach the debt ceiling, and not even just here in the U.S., but globally, central banks are printing a lot of money, and, they're certainly not saying that it's going to happen, but I think gold would act as a good insurance policy in case we run into any issues with that. So, I think people are getting a little impatient, and it's easy to get caught up in the short term, the day-to-day gyrations, the up and downs. But in terms of investing in the long term, it's important to keep that long-term view and to look at things on a long-term basis, and to really rely on the fundamentals. And that story is still intact. So here we can take a look at gold. This is gold over the last 10 years, which shows very steady trend higher. Really, it's climbed. The price has moved higher the last 11 or 12 years in a row now. And looking ahead, though, I don't think anything has changed. There's still a tremendous amount of demand for gold by central banks around the world, as they are now diversifying their reserves away from just U.S. dollars or U.S. Treasury bonds. They see that they're not earning a lot of interest on Treasury bonds. The value of the U.S. dollar continues to decline year after year, or at least in the long term it has. And so gold and other real assets act as a great way to protect against inflation in the long term. Not only that, but there has been a tremendous amount of demand since they've created the exchange-traded products, things like the gold ETFs. They've made it very easy and very efficient for retail investors to now invest in and to own gold. So it's been a tremendous amount of demand, and every month there continues to be inflows into these products, which is just more and more demand for it. The flip side is looking at the supply, and the past few years there have been some serious supply constraints. The mining companies, and I think this is evident when we look at the mining companies and their just relative underperformance. Even as the price of gold continues to climb higher, these companies are still missing earnings expectations, operating at losses. You name it. It's kind of mind-boggling that with the price of gold continuing to rise, they just cannot find and cannot mine and produce enough gold to operate at a profit. So fundamentally, I certainly think that that demand continues to outweigh supply, and that should lead to higher prices. Now, just looking at the chart, where are we right now? Why have we been just kind of grinding sideways? I think that what it comes down to really is we have been consolidating the last move higher in gold, and I can show you that. I can illustrate that by throwing on a few trend lines here. And the way that markets move is that as there's demand, a lot of demand, it will push prices higher. They'll climb and prices will rise until we reach a point that people say, I don't want to buy gold at these prices. I'm going to wait for a pullback and for lower prices before I step in to buy it. So what you can see, these green lines show that demand. When demand is high, price is rising, and then it's got to take a break, and it pauses and it waits, and that's what the red line is. And this has just been a steady trend over the past 10 years, again and again. Generally speaking, this red line will almost always tend to be as long as the green line. So the higher we climb, the more rapid that increase is, the longer we have to kind of pause and consolidate and wait. So really where we're at, what I see is that over the past year and a half, we've simply been consolidating this long run up in 2010 and 2011. I think we're close to the end of that, and I do think we will see the bull market in gold continue. I think we'll see higher prices. I think we're at a good point of value right here, and I'll show you that by simply just throwing on a moving average. This is a 20-month moving average, just shows the average price over the last 20 months. And what you can see is over the last 10 years, every time we approach this line, you see a lot of demand come in and you see it drive the price higher. Even back in the crisis in 2008 when everything really collapsed, it quickly resumed that trend. And again, last time, a few months, 6 months ago, rallied off of it right here again. So I think this is what we were seeing even last month. A lot of central bank buying was occurring. I think they're seeing that longer term value again, and you're going to see buying step in and demand push or start to push gold higher. So, to recap, yes, I think fundamentally it still makes sense. I think gold will be moving higher. We've simply been consolidating a pretty big run up over the past few years. And, within a portfolio for longer term investors, it certainly, makes sense and acts as a great hedge against inflation and an insurance policy as central banks continue to print boatloads and tons of money. So thank you for watching. Hopefully you enjoyed the video.